Joining me now is Craig Brewer, who is a Managing Director at Absa's Corporate and Investment Banking Division. Craig, thanks so much for your time. Just as a bank, it must be a really interesting space for you now, particularly as it does pertain to a sector that is booming by all scores in many people's books, and that is mining. So talk to us about what you are seeing as a bank in terms of activity on the ground.
Thanks, Fifi. At Absa Investment Banking, we've seen quite a bit of activity. What you actually find is the announced activity that gets into the newspapers or on CNBC or the other networks is just the tip of actually what happens underneath that. Because often there's a significant amount of negotiation, discussions, attempts at putting a deal together, but they just don't see the light of day. What we have seen recently in South Africa has been some good M&A interest. You've seen the RB Platts deal and the two parties trying to see if they can pick up that, and I think in Platts it makes great sense in terms of synergies, etc., and I think that's the way that'll pan out. You've seen other corporate finance activities like Anglo-American's spin-off of Thungela Coal, and that's done phenomenally well. I think you speak to any JSE investor and that's been the hot stock of the last 6-8 months, and yet it's coal, and everyone thinks, but surely ESG, that shouldn't happen. And I think that just goes to the point that energy is a larger game than just renewables. Renewables are incredibly important to protect the planet, but what we've got to look at is supplying power to South Africa and Africa, and our base load will always be coal for the foreseeable future, and hence Thungela has done extremely well, as has Exxaro and the like, and the demand for SA coal is massive out there if we can get it onto the rail line down to Richards Bay coal terminal. So that we've seen. I think what we are seeing is a lot of larger mining houses. They're flush with cash. They don't have to go to the banks to lend. They're looking at share buybacks, using their balance sheet more optimally. I think investors are very hesitant that now that some of these mining houses after this commodity super cycle have got so much cash, they're going to venture into non-accretive M&A. I think people, if they look back 10, 12 years, a lot of the mining houses went on a buying spree and paid for it over the next 10 to 15 years. So investors would rather have that money returned to them or used for acquisitions in a very core area rather than across diverse metals or commodities. I think your one exception to that is always Neil Froneman at Sibanye. You know, he's done well from gold, played it into PGMs very successfully, and now looking at battery metals. And I do think in terms of M&A and activity, it's going to be in the battery metal space. Cobalt, lithium, nickel, you name it, everyone wants that.
I mean, in terms of the cash flush position of these banks right now and the other forms of financing that they're using to go ahead their or day-to-day business, is that not a problem then for the banking sector, the fact that they don't need you as much as they did before?
It always goes in cycles. If you look through the COVID cycle, whether it was in mining or any other sector, they needed the banks. The banks came to the table and really helped them out. What we're finding here now is that we're putting in, post-COVID, maybe a more longer-term funding strategy. We're looking at tailoring it to the particular cycle of, say, commodities and the like. And, of course, there are a lot of projects that need to be developed in South Africa and Africa, and you always upfront that normally with project finance and equity. And that brings us to the Mining Indaba. This is a meeting place for investors and mining houses, and I think it's been great that we've seen on day one a return of the investors to South Africa to look at investing in Africa.
You mentioned something very interesting. A lot of activity that you are seeing on the ground, a lot of negotiations taking place, a lot of efforts to put the deals together, but a lot of deals that are being stuck at the table and are not actually reaching the finish line. In your view, perhaps being party of some of those conversations, what is keeping those deals from crossing the finishing line, and how can that be fixed?
Number one is the value expectation gap. Buyer and seller, the gap's too wide and they can't breach that gap and come to a meeting of minds. I think the other aspect is deal fatigue, and that's very important. If you look at some of the regulatory issues we face and some of the infrastructure issues, when someone from external wants to invest in South Africa, they have to get their minds around the power cuts, how Eskom operates, how some of our infrastructure is just ripped off the ground, how they have to protect their investment. And once they start getting understanding that, and they realize that's an added cost to an investment, they can tend to turn around and say, look, it's too much. And I think we must be very mindful of, in South Africa, of the results of the Fraser Institute survey, where South Africa's dropped from mid-table 3 years ago to, I'd say, the bottom 10% in terms of any attractiveness for inward investment. And I think that's what you're seeing is people want to come in and invest, but they don't have either the regulatory certainty in terms of our framework, or they have concerns with how they're going to overcome some of the power cuts, the logistics of getting product to port, etc. And that we as South Africans, government and business, need to resolve.
Is that what's still being reflected on the ground presently, in your view? I mean, we've got over 6,000 delegates that are here from all over the world. We've got various heads of state pitching that their countries are open for investments, particularly in the mining space. What would your assessment be of the investor sentiment to doing more business in South Africa's mining sector? Is it as bleak as when the results of the Fraser Institute came out? Have we seen an improvement? Have we seen a deterioration, in your view?
I think it remains positive, and you can see it from today's attendance. But remember, a lot of people here are to look at Africa. And we as South Africans must understand that we are competing for investment capital with all our other countries in Africa. And you've seen the Ghana delegation here, you've seen Tanzania, everyone's coming through. And we as South Africans need to make sure we present a proper face, and that we turn to investors and say we are resolving these issues. There is incredible interest in South Africa, and particularly in terms of PGM, we are the PGM basket of the world. That's where we will see investment, but they want to know that there's regulatory certainty and the infrastructure support to assist them in mining sustainably in terms of the ESG principles and the like, but getting their product to port and eventually to China or where else.
And in the absence of that, it will be very difficult for us to get the investments that we truly need.
We've always seen South Africa will survive, and it does incredibly well. And even if you see at some of the efforts we're making to overcome some of those infrastructure issues, we will always make a plan, and I always think that South Africa will be the premier destination for investment in Africa.
Craig, thanks so much for your time. We'll leave it there. Craig Brewer, the Managing Director at Absa's CIB, just speaking to the current investment climate, some of the current investor sentiment towards mining right now, saying it's a positive one, but it is also one that has areas of improvement. Policy, more certainty on that front, as well as a more functioning rail system, definitely areas in which if looked at properly, could prop up the level of investments presently.